Welcome to Mundo Crypto. In this video, we're going to carry out a technical analysis of Bitcoin in addition to a fundamental analysis. The fundamental analysis reveals the causes, while the technical analysis uncovers the outcome, meaning causality. What is hash ribbon? What is the Mayer multiple used for? What is the impact of the alarming inflation figure? We'll be covering all of this and much more in this analysis, so be sure to stay until the end. In the weekly time frame, we can see a clear downtrend structure, which was confirmed when the lows from January this year surpassed the lows from September 2021, after which it marked lower highs and lows. In the previous analysis, we had mentioned the 9 consecutive bearish candlesticks that formed, which is the first time this has ever occurred in Bitcoin's history. The week starting May 23rd, a hammer candlestick was drawn, and the week starting May 30th, an inverted hammer candlestick was formed, which in a bearish movement tends to be a sign of a movement reversal. That led to a bullish movement this week, however, ended up turning back, which is a sign of volatility and indecision in the market the moment a doji candlestick is forming. With the deployed moving averages, we can see a bearish direction being taken, and especially that possible cross between the 20 and 100 period moving averages. This cross would be more relevant to the downtrend in the weekly time frame. In the daily time frame, as seen in our previous analysis, which you can watch right here, between May 30th and June 1st, we saw how movements of big players in the market provoked volatility in the price. As a reminder, this was a result of large Bitfinex purchases movements in the perpetual futures market, and movements that looked to activate margin calls and certain liquidity positions. This week, however, the reasons behind these movements are linked to fundamental news surrounding cryptocurrencies, which we'll be analysing shortly. Now, what we've seen since May 30th is a compression range between $28,000 and $32,000 approximately. It is a parallel channel, a price consolidation range. Following the volatile movement between May 30th and June 1st, we can see how a range has begun to form between May 30th up until today. We can see that every time the price gets close to touching the resistance between $31,000 and $32,000, it is quickly rejected and reaches the $29,500 zone. We can see that this repeats itself and bounces within those important liquidity zones of both bulls and bears. If we take a look at the mini range in the parallel channel on June 7th, we saw a pretty volatile movement with a candlestick that managed to cover the previous day's candlestick but was quickly rejected in that important liquidity zone. A hanging man candlestick is what formed on June 7th, which in a superior part of a bullish movement tends to indicate a movement reversal, and as we saw, a bearish candlestick formed on June 8th. On June 9th, a doji gravestone formed. With the moving averages deployed, we can see how the movement oscillates between the 20 period moving average and the resistance found between $31,000 and $32,000. Since May 30th, the 20 period moving average has served as a support zone. To see a bearish movement, we'd have to see candlesticks closing below the $29,000 zone approximately to once again test the $28,000 zone, which is the most important support at the moment, and in the event of losing it, it could lead to a continuation movement between $24,000 and $26,000. On the flip side, if we once again see candlesticks closing above the 20 period moving average and then see the volume input surpassing the previous volume average, the price would go on to test the higher part of the lateral consolidation channel. But if the volume input comes hand in hand with buying interest, we would see a continuation movement to the resistance zone that converges with the 50 period moving average between $33,000 and $34,000. And now let's apply the fractal trading technique, which is another way of approaching the markets and has quite a following. A fractal is basically a structure that has a fractional dimension with the possibility to subdivide it into other equal structures of a smaller scale. If we take a look, as of now, we can see a possible fractality between what happened in March and May this year, which represented a price distribution zone and what has happened over the last few weeks. As we can see, there are lots of similarities. Now, if we see a sprint such as the one at the moment, it could be a sign of a distributive movement, which would lead us to the $25,000 zone. However, This does not mean that the movement cannot lead to an accumulation movement on a larger scale, as it did between May and July 2021, forming a larger range. Nevertheless, there are differences between the movement at the beginning of the year and the current one, as the main ones being the last year's movement is neutral in strength, with a convergence between the price and the RSI, whereas now we have reached the oversold zone where divergences have been marked. Therefore, the opposite possibility exists, meaning if we turn this fractal around, we would be facing a cumulative pattern, which could result in a sprint in the lower support area in order to continue the upward movement. Now, let's discuss the hash ribbon. What is hash ribbon? It is an indicator that uses the 30 and 60 period moving averages of the Bitcoin hash rate to determine when miner capitalization occurs, which is when miners shut down profitable equipment because it is difficult for them to cover the production costs of the blockchain. As we can see on this chart, the moment in which the short 30 period moving average and the long 60 period moving average cross each other has already taken place. This reveals that Bitcoin miners turn off equipment that is less profitable because it is difficult for them to cover the production costs of on the blockchain. This leads them to make sales of their holdings. And now let's take a look at how traditional markets have played out by analysing the SP 500 index. In our previous analysis, we saw that a lateral range with a type of symmetrical triangle started to form. As we can see, the price has attempted to surpass the trend line, which has served as a resistance. Over 8 days, the index has been compressing itself following the boost experienced on May 26th and 27th. That boost went against Bitcoin's movement, which at that moment continued to reverse back, which indicates a small separation between SP 500 and Bitcoin. On June 9th, we saw something very similar, given that although Bitcoin closed with a red candlestick, the SP 500 index headed towards the 4,000 point zone approximately, creating a bearish engulfing candlestick of considerable size. This movement was caused by the news surrounding the macroeconomic context, which we'll be covering shortly. And now we'll have to see whether the pullback movement is carried out in order to return to the 4,100 point resistance, where there is a downtrend. And as usual, let's move on to the fundamental analysis, in which we'll analyze the most relevant news stories in the crypto field, which, as you know, could influence the price of Bitcoin as well as the rest of cryptocurrencies. The large cryptocurrency company Binance has been accused of facilitating money laundering. The news platform Reuters has carried out an investigation detailing how Binance acted as an intermediary in money laundering and the illegal sale of drugs. This is obviously not good news for Chang Pen Zhao's company. The company, however, has released a statement accusing Reuters of publishing a false story. The CEO of Binance even talks about fiction. On the other hand, the SEC has started looking into whether Binance broke the law when it launched the BNB token through an ICO in 2017. But it's not all bad news. There have also been some positive developments in the market. The USDD stablecoin launched just recently within the Tron ecosystem and will be backed by assets such as Bitcoin and other stablecoins. The idea is that Tron's reserves should be able to cover 130% of USDD's value. In other words, it is over-collateralized to guarantee its values. Here we can see the reserves, where we can see that it currently totals 14,000 Bitcoins with a value of $420 million. Here, we can see Tron DAO's latest movements, which has sent $100 million to Binance to supposedly purchase more Bitcoins. But the good news also extends to the realm of mutual funds. The large Grayscale fund has hired a renowned lawyer to manage the request for approval of its Bitcoin ETF before the SEC, the United States regulatory body. Last year, the SEC already delayed the approval of the Bitcoin ETF on the grounds that it needs more time to analyze it. And in the payments field, PayPal will enable the transfer of cryptocurrencies in the United States. The entity will accept payments through Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. At this point, let us now analyze the most relevant macroeconomic data because, as you know, these have a direct impact on the cryptocurrency market. In the United States, we should look at non-farm payroll. This data measures the change in the number of people employed during the last month in all non-agricultural businesses. This indicator represents approximately 80% of the workers who produce the entire gross domestic product of the United States. A higher than expected reading should be taken as positive and bullish for the dollar, while a lower than expected reading should be taken as a negative and bearish for the dollar. On June 3rd, the data was published and it was better than expected, reaching 390,000. The unemployment data, moreover, continues to be very, very low, standing at 3.6% in May. And a key aspect in the macroeconomic field is that interest rates in the Eurozone will increase in the month of July. The president of the European Central Bank has announced a rise in interest rates by 0.25 points and gradual hikes in the month of September. In addition, these assets purchase program will also stop in the month of July. But Lagarde warns that inflation is the main challenge in the Eurozone and believes that the rise of wages, beating expectations, could continue to boost inflation levels and could lead to an inflationary spiral. But going back to the United States, the Employment Statistics Office has published the country's inflation data, which sits at 8.6% in the month of May, much higher than expected, which is bad news. And why can this be a blow to the markets? As you know, the Federal Reserve seeks to keep inflation at 2%, and given this worrying inflation data, it could raise interest rates more than expected. This abrupt rate hike could put a damper on the economy and could even lead to a period of recession. Next June 15th, we'll be paying close attention to the decision taken by the Fed in regards to interest rates and will be covered in our next analysis. And in today's Onchain Analysis, we're going to look at Mayer multiple. But how is this calculated? The Mayer multiple is a result of Bitcoin's current price divided by its 200-period moving average. It essentially measures how close the current price is to the 200-period moving average on the daily time frame. As we can see in this chart, the price has been below the oscillator on just 4 occasions, which is obtained through a mathematical calculation based on the Mayer multiple. But why is this important? Because 95% of the history of Bitcoin, its price has been above that oscillator, and whenever it's below it, they have been a good accumulation zones. Now, it has been very close to touching it, but it has not surpassed it to the downside, and that is why the distribution scenario is within the projections. Now, let's look at the realized price. What is this realized price? It is the average price at which the unspent Bitcoins have been bought. To do this, it takes into account the price at which each Bitcoin was the last time it moved from one wallet to another, which is why we speak of unspent Bitcoins. And this data helps us to calculate the MVRV, which is basically the division between the current market value and the realized price. If this number is above 3.7, Bitcoin would be considered overvalued. If on the contrary it is below 1, it would be undervalued. In this chart, we can see that the MVRV sits at 1.28. In other words, it is almost an undervaluation zone. When Bitcoin's price has been below the realized price, that has been an accumulation zone as indicated by the Mayer multiple. Here we can see that investors are not carrying out as much leverage as occurred a few weeks ago, which is why fewer liquidations have been produced. Now the movements are influenced by fundamental developments. The fear and greed indicator reveals that there's still a state of extreme fear in the cryptocurrency market. On the other hand, investment funds over the last few days have discarded Bitcoins accumulated towards the end of May, although they're maintained at important levels held of assets. And if we take a look at the volume profile, which indicates the buying and selling volume in certain price zones, at this moment we're in an important zone. We're talking about the $29,300 zone, the support zone of the mini range zone mentioned previously in the technical analysis. In short, the market is in a moment of indecision. As we have seen, the macroeconomic data will determine whether the balance tips towards the distribution or accumulation scene.